Hello everyone. I wanted to show a couple of examples of calculating depreciation. That seems to be the hardest part of Chapter 6 in terms of the expenses is depreciation. Just because there are so many different rules, it's also, I believe, the longest chapter in our textbook. So we want to think about that because it comes up in every situation where someone has their own business, the idea of depreciation, almost every business. So let's say, for instance, that we have a business that bought a machine in 2019 for $80,000. Now, as you think about that, there are first two rules you want to think about is, do I want to take Section 179 on this machine? Section 179 allows you to deduct the full amount of the cost of the asset, even though it is an asset. Instead of really depreciating it, you could deduct the full amount in the current year, up to $1,020,000 in 2019, which obviously 80,000 is well below that. So we have that as long as it fits the definition, qualifies as an asset that fits under Section 179, you could do that. And it's fairly broad, but there are some things that would not qualify as Section 179 an asset. So if that doesn't work, you could also deduct 100% of the cost under the provisions of what we used to call bonus depreciation or special depreciation is the term that we're using. And that is unlimited as long as, again, the asset qualifies. And we've broadened that definition in 2019 so that very few assets don't qualify. So if you didn't work with Section 179, and there are some limits on Section 179 besides the dollar limit. There's also how much earned income from the business you had, which may limit that, which does not apply to bonus or special depreciation. Either way, you could choose to depreciate all of this asset in the current year. But both of those are elected amounts. So you could elect, if you say, for instance, wanted to leave some of the depreciation for a later year, you could choose not use special depreciation for all of it, but just for part of it, or Section 179, not instead of for all of it, for part of it. So if you did, let's say, and decided to take $40,000 as Section 179 for this asset, that would give you a $40,000 deduction, and then you would have the remaining amount. And let's say you just choose that that part is going to be under the usual depreciation maker's rules, because you'd like to save some depreciation for future years because your income is going to be higher in future years. So when you calculate your depreciation, you use the table and you have to determine what class your property is in. So machinery is typically 7-year property, so that's what we're going to use. And so for 2019 depreciation, all right, we would go to the table, and as long as we don't have too much of our assets bought at the end of the year, we use the half-year convention table. And so in that table, we would take the 40,000, we multiply it by the 0.1429 from the table. It says 14.29%, but if you move that over, or you can put it in your calculator however you want, and that's 5,716. For 2020, just so you have a review of how to use the table. We use the remaining, the 40,000 again, okay, and we multiply it by the next number down on the table on the 7-year category, or column, however you want to think about it. And then 2021, you would use the 0.1749 and so forth. If you hadn't taken any Section 179, you would take the 80,000 multiplied by each of those percentages. And so you don't have to do any other calculation. You don't have to worry about residual value. You don't have to worry about any salvage value. You don't have to worry about part of the year, any of that type of thing. You just use the right place on the table. Now, the only time that Makers runs into a problem with that is if you buy more than 40% of your assets subject to this during the last quarter of the year. Now, if that's the case, you have to use the mid-quarter convention. Let's say this $80,000 asset was purchased in the fourth quarter, and there's a series of tables for each quarter that you purchase. Then if you look at the first year for 7-year property, it's actually 0.0357. So we're going to take the remaining because you're only going to depreciate it as if it was bought in the middle of the fourth quarter. So if this were our only machine and we bought it in, say, October of 2019, we would have to use the mid-quarter convention if we were going to use regular Makers depreciation for any part of it. If we used all Section 179 or all special depreciation, then we wouldn't have to worry about what time of the year it was purchased. All right, so residential real estate does not qualify for Section 179 or special depreciation. So there's nothing you can take. You have to depreciate it using the regular Makers. And there's a table for that, 27.5 years. However, it's almost as easy to just take the total, divide by 27.5, and then divide by 12, because everything under a residential real estate, all real estate is done on a mid-month convention. So if we bought this residential real estate, say on let's say July of 2019, anytime in July, we would treat it as if it was bought on the 15th of July, and therefore we would depreciate it for 5.5 months. So no matter what day of the month, you use the middle of the month for the first year. And that would be your depreciation on that $250,000. For other years, it's just really simple because it's straight line. It's just divide by the 27.5. So in 2020, that would be your depreciation. In 2019, it is based on 5.5 months. Same thing happens with non-residential real estate, except for we divide by 39 years for commercial. This is office buildings, that sort of thing. Again, you divide by the 12, or you can use the table, and then depends on when you buy it. Let's say we bought this, in this instance, in November. That would be half of a month. We'd treat it as November 15th. That'd be half a month November and 1 month in December. So 1.5. So we'd only depreciate it for that amount for the first year. And then for the second year, it's easy. Divide by 39. And that would be your depreciation for the second year. So Real estate is a little more straightforward, not as many quirks because it doesn't qualify for our two special deals. Now, the other kind of oddball that comes up so often is passenger vehicles. Now, first of all, there's an SUV calculation. So there's a section 179 limit on SUVs, which is higher. Okay. There's a bonus depreciation or a special depreciation maximum. So what happens with a passenger vehicle? Let's say that we got a fairly expensive passenger vehicle, not an SUV, but a passenger vehicle. Let's say it cost us $90,000. All right, we could take a bonus or actually the calculation combines the special and regular depreciation so for 2019, 2020, it's actually given to you the maximum. So it combines the special depreciation and the and so that will be 14,900 and 16,100 for year 2, and it actually spells out 9,700 for year 3. And year 4, it's going to be 5760. And we're going to just keep doing that for year 4, 5, 6 until we get to 90,000. So this bonus does give us some additional or this extra depreciation up front, but we are penalized in the sense that we don't get to depreciate this very quickly. So if you look at this, you would have this much left to depreciate. That much left to depreciate after year 2. And it's going to take us approximately, 7 more years to fully depreciate this passenger vehicle. So you can see why for many the consideration is to use the mileage that concept that is talked about in chapter 6 as well, because the depreciation of that passenger vehicle is limited. Not as bad for SUVs, and again, these are passenger vehicles, so something like a cargo truck or things like that are not counted. A bus, limousine, those are not considered passenger vehicles if they can are really designed to carry other people. So this is really to prevent someone spending it doesn't prevent you from spending as much as you want on your passenger vehicle. It just limits how much depreciation as a way of kind of penalizing, if you will, reducing your deduction for those who buy very expensive passenger vehicles.